Hello, welcome to another talk on money, business, and investment. My name is Jose. I'm the founder of the company Brain here, Master Investor. If you're new to our community, ensure to subscribe and follow us on all other social media platforms. Turn on the notifications so that you know when we go live or upload a valuable video that can change our finances forever as long as we apply the information into our lives. We need to have actionable steps every single day, and it's up to us, right? We need to read every day. We need to improve our vocabulary. We need to show up and put in the time and effort and even our money to work towards building our passive income, right? Investing in ourselves, self-development. Everything that we are going to be talking about in our channel and through our content is to elevate our financial IQ, to improve our intelligence regarding finances. A lot of people lack financial education when it comes to money. That's why they end up giving their money away to other people that are salespeople to invest it for them. So we need to take control over our finances. Today we have a great topic. It's going to be on how to invest in crypto to get cash flow. Remember, rule number one in our community is that we work to build passive income and make money work hard through sound investing. If you're an existing partner, welcome back. Thank you for keeping Master Investor working and investing in our products and services. Make sure you check out the links in the description if you haven't gotten our digital courses, ebooks. We have 3 right now: the 10 new rules of money, how to invest in crypto to build wealth, understand the Bitcoin and blockchain, and how to build cash flow with the internet, turn passive income on. Remember, there are 5 different asset classes that exist that we can invest in. Number 1, business. Number 2, real estate. Number 3, crypto. Number 4, paper assets. Number 5, commodities. Today, we're going to be talking about crypto, right? And today, crypto is the new money in town. We need to understand that and use it into our advantage. Everything is going digital now. And we have been going through this transition for the past decades. Now we're going to start seeing literally just about anything going digital. So we need to adapt. We need to be flexible. We need to take control over our finances, our decisions when it comes to building our wealth. And in order to do that, we need to have financial literacy. We need to invest in our financial education daily. Remember, there are 3 types of education that exist. Majority of people only get these 2 types. They get academic education and professional education, but they lack financial education because we go back to history about money and also the schools. So remember, every business or investment or organization has a mission. And behind that mission, you have the core values and the vision of that institution. And in regards to the school board, John D. Rockefeller established the General Educational Board on 1902, and it was decided that they wanted 2 types of people out of the school system: employees and soldiers. Employees to work for the corporations of the wealthy, and soldiers to defend the corporations of the wealthy. So when we go to school, when we graduate, we don't learn how to invest and create wealth and create total freedom in our lives. The fake dream that we are sold is that you need to get good grades, get a high paying job, and invest in fake assets, save for your retirement. Saving is a losing strategy. We say it all the time in our talks, right? Every day, savers are losers. Why? Because money is losing value every day. The dollar is. Since 1971, August 15, when President Nixon separated the gold standard from the US dollar, from that point forward, money became monopoly money, fiat money, currency, paper, fake, and just an idea backed up by confidence. It was created with debt. So money is debt today. So we need to utilize debt because debt is tax-free. All debt is tax-free. Credit cards, loans, any type of debt. A lot of people are only used to using debt to acquire liabilities. And remember, we're not going to shrink our expenses or cut our lifestyle, live below our means to build wealth. Not at all. In fact, we want to do the opposite. We want to expand. We want to expand our assets column, and we need to begin to feed it every day. So we want to be talking about crypto today, how to start investing in cryptocurrencies. And we can use them to pay each other, to pay other businesses, because it's the new money in town. Eventually, it might just replace the dollar that we see in paper, because every currency in history has gone to its intrinsic value, which is zero. The dollar has lost 95% of its value since 1971, when it was separated from the gold standard. 1974, another big year in regards to money. They didn't teach us this at school. We didn't see this in history or in any of our classes. But in 1974, the petrodollar agreement was signed with Saudi Arabia, which basically stated that every single country around the world will have to exchange their currency into US dollars before they could buy oil, putting the US dollar as the number one currency in the world. But today that agreement is being broken by Saudi Arabia. In exchange, we were giving them infrastructure development and, I believe, military aid. So we were helping them to build up what today is Saudi Arabia as well. So, but they're breaking that agreement because now they're selling oil to our enemies in their currency. And they're saying, okay, we don't care about that agreement, basically. So we don't know what's going to happen with that. And everybody's is looking towards crypto. So there are a lot of countries that have accepted already crypto as their currency. United States is one, right? As a currency. The last year was passed by Congress. So we need to understand all of these changes, because money evolves just like anything else in this life. Everything is in constant change. We need to understand how to capture early trends. We need to position ourselves, and we need to be the right type of individuals. We need to have the right mindset. Remember what I said before about the context versus content? What's more important? Context. Why? Because that's the framework. If we are operating with the poor mindset, which majority of people are operating with, believe it or not, including those people that get paid a lot of money by exchanging their time for money because they have a great profession. Maybe they're lawyers, or they're maybe a CPA, could be self-employed person. It also could be a high-pay employee from a good company, right? That they could be a CEO of a company, still an employee. So those people on the left side of the cash flow circle. If you're exchanging time for money, regardless of how much you're getting paid for, you're still trading time for money. And there is a cap of how much money you can make. Yeah, you might get bonuses and so forth, but there's always a cap. So in order to transition from the left side of the cash flow circle to the right side of the cash flow circle, where we find the business owner who controls and owns systems, right? And those systems do the selling and selling for us on autopilot. And then we also have the inside investor, or the capitalist, or the master investor, if you will, which we make money work hard through sound investing. So the purpose of making our money work hard is that we have constant passive income coming to us every single day, even while we're sleeping, exercising, vacationing, showering, doing anything in life, getting paid to just be ourselves. That's the whole purpose of mastering money and making money our slave. But we need to have the basics. That's why I'm here every single day giving you the good and bad news of money, the business principles that work in all economies. Our mission at Master Investor is to elevate the financial well-being of humanity through high-quality financial education. Made simple, we look at opportunities to build passive income and true wealth. Today, more than ever, we need this type of education, financial education, because everything is changing so quickly that more opportunities are coming in front of us. But if we're not ready to capture those opportunities, if we're not prepared, they might be in front of you, but you won't be able to capitalize on them. So we need to understand how to utilize debt to become wealthy, how to minimize taxes. We're going to learn about corporate law, security law, tax law. We're going to learn a little bit about everything. Remember, a wealthy entrepreneur and an inside investor, we are a generalist, meaning that we know a little bit about everything. And then we hire the specialists, professionals. We hire the broker, we hire the bookkeeper, we hire the CPA, we hire the attorney, we hire the CEO. We're creating a brand here out of our companies. We're not just creating commodities. Because if we're building a company from scratch, which I hope everyone who's listening to this podcast will eventually get their hands on building their own brand. It's important. It's something that you can sell after 25 years. Would you rather give your entire time to somebody else's brand, or do you rather give your time to building your own brand? And hopefully it's also not your name, unless you want to turn your own name into a brand, and now it becomes the product. The important is to detach ourselves from our brand, so everybody wants to be part of the brand. I believe true brands are like Coca-Cola, Nike, Master Investor, because it has nothing to do with a singular person, perhaps. It has to do with everybody, right? And I believe brands like the ones that have people's names on it, they eventually would die down and will be replaced by new brands. I believe, there are really strong brands out there, unless that vision and that infrastructure is very solid. But usually, after 1,000 years, after 500 years, who knows if that brand will still be there. Look at Coca-Cola, look at Nike. These brands are like going generation after generation. Let's see how much they still got, because everything is changing, but those brands are not scared to change, and we shouldn't be scared to change either. The people that are scared to change in the brands and the companies, we see them fail. We saw it with Toys R Us, right? Big companies are closing down. Radio Shack, right? Why did they close? The main reason, if you look at what happened to them, it was because they were unwilling Blockbuster. They could have been the first Netflix. It's incredible how they missed out on early opportunity, and they had it. They were unwilling to change. Everything was going digital. People don't want to pick up CDs anymore to watch movies. If you can watch a movie on YouTube, you can rent it on YouTube HD. You can even have a projector 4K into your wall. Everything is all about artificial intelligence, technology, how fast we can get that satisfaction of that product. Today, everything is about connecting the end user with the provider, so we don't even need to create the product ourselves to start getting passive income from direct sales. The job number one of a wealthy entrepreneur is to raise capital. And the number one skill is to sell without selling, using systems and smart marketing. We don't want to be doing sales 101, knocking on people's doors. That's not what we're learning how to do here. We're putting our money to work, and we're investing in our financial education. And it's up to each of us where we're going to invest and how are we going to invest it. We come here to educate ourselves. None of this should be taken as any financial advice. I'm a financial investor myself. We are more than an investment management company, and we educate and we talk about the basics and the new rules of money and make people aware of the new principles that we can use today to get ahead financially and start investing like the wealthy, with control, leverage, and of course debt, right? Leverage with systems, and debt is also a form of leverage. We're using the house money, we're using OPM, other people's money, tax-free. So before we judge quickly other people why they don't pay taxes, we need to ask ourselves, why do the ultra wealthy don't pay taxes? And then we can begin to reverse engineer their mindset. And the reason why is because the tax code and the corporate law favors the wealthy entrepreneur and inside investor, because the rules were created by who? The wealthy. To favor who? The wealthy. But the wealthy mindset, not the wealthy, the one that necessarily has the money. We can be wealthy with the mindset and not yet have the money physically. Okay, and that is part of the process. I don't believe anybody that is wealthy today never thought about being wealthy before they became wealthy, unless they inherit the money. But they, at some point, they thought of getting that money anyway. It was probably pretty obvious in their lives. But the point is that people always think about what they're getting in life. So we need to become wealthy in the mindset. That's why I say the context is more important than the content. The framework in which we are operating about money. How do we make our money? Do you understand a lot of people spend their entire year without thinking about creating an asset or acquiring an investment that produces money for them while they're sleeping, so that they can get ahead and eventually maybe replace their income of earned income that they're getting from their job for selling time for money? So they spend that entire year after year in and out. Some people spend 40 years at a place and they never traveled, they never really experienced life. They were going from house to work, house to work, house to work. Weekends off maybe, and the more responsibilities they get, the more liabilities they get, the more they need to make, and they need to probably work extra hours now. And they lack the time because they're investing their time in the wrong areas. It's okay that if you have a job and you need to use that money to establish yourself and your assets and get ahead and pay the bills, great. But at some point, we have to ask ourselves, what are we doing? Is that going to get us what we want out of life? If the answer is no, too many times, too many days, we got to change something drastically. Don't do the same thing over and over, expect a different result. People get sick at the end of their life because they work at a job that they hate. That's just the reality. There was a case study that they did in the United States, and they said people had the heart attacks between like Monday and Tuesday, and like early in the week and early in the morning before they go to work. People work their entire life for money to try to get their health back, but you can't really buy your health. You gotta invest in your health now. That's why we say the 4 pillars of an extraordinary life: health, wealth, love, and happiness. We need to invest in those pillars every day, right? So we need to have a plan that will help us get closer to the bigger dreams. And every day counts, baby steps. Okay, so every day, even though we may not see the changes, they are happening because everything is moving towards whatever we're moving, whatever we're paying attention to, everything is getting aligned. Everything is energy. So what are we focusing on? What are we listening to? What are we reading? Today is very easy to get distracted and scroll down the wrong data. We need to have a plan every day. That's why I said that should be our daily GPS. Okay, in this next 24 hours, you don't have to be detailed like I am. And the more detailed you are, the better you're going to get in life. The more things in your favor because you're detailed with it. So my suggestion is to be detailed, 100%. But some people, they're just not willing to put the time to understand what they want out of life. And I always say you got to figure out what is the why behind what are we doing. If the why is big enough, then when it gets tough, if it does, and it shouldn't be, because today we have technology, so we can learn from each other very quickly. So we should make a lot of mistakes. It's okay to make mistakes and learn from our errors, but we can avoid making mistakes if we tap into the right mentors and the right sources, people that already have done what we want recently and previously as well, so that we can learn from what they have overcame along the way. So it's not that we have to learn from our mistakes so we will make notes and we learn from our mistakes, but we don't have to make them. If we don't have to, there's no rule that says, okay, you have to make that mistake in order for you to become successful. No, you don't. If you learn not to go into that hole and you learn to go around it because you read a book about that, then you don't make that mistake. you already made it in your mind, and you figure it out that if you actually go there physically, it's going to delay the journey. So we don't have to go through that mistake. We can just go around it. And that is wiser. That's just about the shortcut that exists in life. If you want to have any shortcuts that are legal and ethical, then let's read more, listen to other people more. That's why we have 2 ears. But let's listen to the right sources. Choose our 5 people wisely. A lot of people are wasting their time, even if they don't get their family on the same page. If you have a spouse, if you have a partner, today you don't even need to be married to be, living together. A lot of people live together nowadays, right? But if you have a partner, if you have kids, you need to talk about money. You need to get them involved at least 1 hour a day on financial education. Give them this content right here. Make them a habit of listening to something that is positive, that is helping you understand how to make money work hard through sound investing, how to take action, not to give your money away to anybody. That's not what we're helping people do here at all. That's why I said earlier, we want control. So we want to do everything ourselves in regards to making the decisions of where our money is going to be working. Instead of us giving it to somebody to invest it for us, we're going to do it. So instead of us giving it to a firm that is going to put it into crypto, we're going to put it into crypto ourselves. We're going to go into one of the wallets, one of the websites, crypto.com, for example. You can click the link in the description. I added a referral link to that crypto.com website where you can create a wallet and you can start using the tools, resources. They have plenty of information. You can see the cryptocurrencies, all of them, and which ones you want to invest, and you can see the entire charts, and you can monitor them, and you can even order a Visa card so that you can withdraw the gains, and you can start utilizing crypto to pay whatever you need and to start investing. Hopefully you invest like we explain here how to do and how to tap into the velocity of cash flow. In other words, we want to reinvest back our gains into getting more assets that produce more cash flow. And it's up to us where we're going to invest, right? It's up to you. Okay, you're going to choose, real estate, you're going to choose crypto, commodities, and whatnot. At the end of the day, we want to diversify among the 5 different asset classes that exist, because that's how we protect ourselves from down economies and hedge for inflation. Because when one asset class crashes, we still have other asset classes are doing great, so we're not hurting when one of them is hurting. So we understand that the economy goes up and down. We don't want to necessarily predict the economy because we know it's just going to go up and down. We just want to make sure that we are prepared for any type of economy. And as I always say, it's better to be prepared for an opportunity that never shows up than it is not to be prepared and the opportunity does show up. 2 types of pain in life: the pain of regret and the pain of discipline. It's up to us which one do we want to choose. Every day we have a choice to make. Are we going to go with discipline? And it's temporary, that pain. Regret is forever. So we don't want to do something that we will regret tomorrow, right? Or even right after we do it. Be very careful of our choices. I don't care the age, right? This is for everybody. This message and this financial education that we're given here inside our community, really anybody can use this to their advantage, because it's all about understanding how money works, how money is created, how the wealthy creates their wealth, and we need to copy those patterns. The formulas to create wealth are already created. We don't need to reinvent the wheel. We can innovate, of course. We're going to learn from our competitors. We're going to increase the value. We're going to maybe use less resources and make it more affordable for the masses and solve more problems. And we're going to create something unique, something original. We're going to innovate. We're going to even have an innovate department in all of our institutions and all of our companies that we've built. We should have an innovating department. We need to stay in that path of innovation, because everything is changing quickly. We need to adapt new ways that we're learning about technology. We need to invest in artificial intelligence and smarter systems to be able to even get to more audiences that are looking for our product, but they just haven't learned about our brand. So figure out if our product that we are going to be offering is solving a good need in the world. How big is that need? Can we really go worldwide with it, right? And today we can sell digital products very quickly, and even physical products. We don't need to touch them either. We can do drop shipping. We can use the factories to ship the product to the customer. We can use other people's warehouses. Today we have Amazon. We can become allies with big platforms like that and tap into their entire customer database. But we also need to build our database. As I always say, collect emails every day. People that are interested in what we are offering, whether it's other people's products that we're giving them or we're making our own products and we're building our own community. We need to create our own database with real people that are interested in learning more about our products. People do business with us because they like us, know us, and trust us. And once we figure out how to do marketing, because that is sales via systems, then you don't have to be present to make the money. You don't have to even create the videos or the talks or the content like I am doing right now, perhaps. No, not at all. You can make your money, work hard. You can pay other people to do videos if you want to create content for your brand and so forth, if you're creating a company from scratch. But in order to become wealthy, you just need to focus on building assets and acquiring assets that produce passive income and capital gains income. A lot of people never get to do that because they're investing in fake assets such as 401k, mutual funds, ETFs, IRA. Those are fake assets. Why? Because they don't put any money into the person's pocket. And if they withdraw any of their money earlier, they get penalized. So it's really a gamble, because who is saying that in 20, 30 years from now, those companies will still be here up and running? Everything is changing so quickly, like I mentioned plenty of times on this talk, that we need to just completely unlearn what we thought that was relevant yesterday and learn the new data today. And the ones that are willing to quickly unlearn and learn, and it's not about learning, it's about just replacing and learning more. We don't have to really, we put it in a memory file, we put it to one side. Okay, well, this is what used to work before. Now we have the new data. This is a new file. This is a new software. So we need to be like our computers, like our iPhones and smart devices. We need to update ourselves all the time. So invest in the newest asset class in new money in town, crypto. If you have any questions, let me know. Make sure you give us your feedback. A guide to maturity and freedom. In general, there is a vague plan in place while we are young for many individuals, in the hopes that people's child would gain a sense of identity through their academic and professional education. Most parents want their child to receive a proper education. After receiving their professional education, they will chart a course for a bright future that will last a lifetime. Things before the traditional college age sort of have a plan and a course. But when we grow older, we have to fend for ourselves in the outside world. The way suddenly becomes less obvious. We are aware that we receive training and instruction on how to become devoted students or diligent workers, but we were not appropriately provided with the resources and direction necessary to help us achieve our goals of financial independence and total freedom. It was never instilled in people's mind to save, to invest in assets, right? They were always taught to save money, get a high-paying job, invest in pensions like 401ks. And by the way, that was created in 1974 when the Saudi Arabia agreement was signed, the petrodollar agreement. ERISA was signed, the Employment Retirement Income Security Act. That's right, you can look it up. So the 401k and all of these fake assets began to flourish because Basically, they wanted to encourage people, the high-paying employee, the left side, the cash flow circle, the employee and the self-employed, to invest in fake assets, to invest in the stock market. So basically, the wealthy created these fake assets to get people to invest their money in these fake assets. And at the end of the day, if you're not the one that created the asset and you're just purchasing the asset and you're not getting anything back, you're not getting passive income or capital gains income, then it's a liability. Let's just face it, that's what it is. An asset puts money in our pocket right now whenever we're not working. So when we invest in a cryptocurrency today, let's say, and now tomorrow we wake up and let's say Bitcoin today was 62,000, a little over 62,000. So let's say tomorrow it goes up to 63,000, a little over. Now we have $1,000 that we can use over tomorrow. Okay, and we can use that to invest in more crypto. We can buy more crypto if we want, right? And we can buy other things. So we can create cash flow by investing our money wisely, by putting it to work. But we need to take control. We cannot give our money away to anybody. We are aware that we receive training and instructions of how to become devoted students. Okay, said that. It was never instilled that we should invest in our financial education. At no point in schools they teach you how to create your corporation, because that's not what the schools were made for, and we need to accept that. So if you want to become a doctor, yes, you need schooling. You need to go professional schooling, and it's okay if you love to do what you do. There's nothing wrong with having a job. Okay, we need great employees. And even those people that love their job, they still need to learn how to invest. This education is for you as well. Because at some point you want to retire. At some point you want to create something maybe for the world, that you can solve millions of people's lives, right? Problems, you can improve them in some way or another. Everything was a dream, everything was a thought before the phones, anything that we see in this reality, right? We're holding a microphone like I'm holding a microphone right now. And our computers, everything, right? So we need to think about, what do we want to live in this reality? Do we want to live anything? Do we want to contribute something for the world? And I truly believe when we tap into that sense, into that mindset, we truly find happiness, because the more people we help in the world, the happier we become and the more love we have. So it's all about improving people's lives, and at the same time we're improving ourselves, because we're being disciplined, we're reading every day, and we're constantly investing actively. So don't give your money away. Invest in a course. Whatever asset class we're going to invest in, we're going to get a course, go into a digital course, or read an ebook, or even a mentor in person that already has done that, and we can meet them in person and invest in their time and whatnot, so we can learn and avoid mistakes that are necessary. We are therefore more inclined to learn via trial and error in the absence of a roadmap, while pursuing passive income or attracting passive income. I'd rather say attracting, because here in our community we learn how to attract money, right? Because money is finding good deals. Money is always around us, finding good deals. Debt, right? The bank's money is always saying, okay, who has the next hot deal in their hands, that knows how to control it, that knows how to put the team together, that's going to manage the team, the entire operation, because the banks are in the business to acquiring assets and improving their CAMO score. Okay, so they need to lend the savers money. They understand savers are losers. They need to grab the money, move it into sound investing, and they need people like us. They need corporations like us, people that understand about entrepreneurship and creating passive income through controlling assets and managing debt. Okay, and the bank doesn't care about a report card from school, doesn't care about the GPA, doesn't care about grades. They care about our financial education, the cash flow analysis that we give to the bank regarding that project that we bring into their attention. They're always looking to lend their money. Okay, so if the numbers work, then the bank is going to lend us their money, because they're betting on the asset itself. So as we attract passive income, which is a challenging path, but easier than ever before right now. So we need to start acting. It is also one that we are never given as a choice when we attend traditional school, and they never talk about passive income. We never heard anything about passive income and why the wealthy can have all this freedom and all of these things. They don't work hard for those things. They work hard at building passive income through having systems, which those systems are businesses and ultimately brands that are solving problems in the world. They're creating a product or service that people want. We are trained to look for well-paying positions and possibilities, but we never stop to think about the day or circumstances that will make it impossible for us to continue in that position. Many people have experienced the transition from a high-earning lifestyle to one marked by financial instability as a result of unforeseen events. A job alone won't get a person completely financially independent, even while it can help a person establish a life and ensure some sort of security. The employee and self-employed remain bound to the expectations of others if they lack the capacity to manage their finances independently and take charge of their own destiny. Being financially independent entails being in charge of our own destiny and being able to follow our own financial, personal, and professional goals. Investing is necessary to build true wealth, which ultimately translates into total freedom. This post will examine a possible roadmap that include ideas and tactics for employing cryptocurrency to generate passive income. If you want to have this newsletter, then make sure you go to our website. It's free to sign up so that you can have the article via email. We're doing an article every day. If you can't make it to the podcast or our live stream on YouTube or any other platform, then you at least have some time to read the article that will improve your financial IQ and ultimately help you improve our passive income, right? Which is positive cash flow, and ultimately that gives us total freedom. So we need to focus on building passive income. Recall that the value of cryptocurrency is erratic. Price swings are a well-known feature of cryptocurrencies. This risk element is now a part of the cryptocurrency market's normal cycle. The volatility is also influenced by other elements, including regulations, speculation, and the limited supply of some coins. Before making an investment, as with any other, it is crucial to do our homework, make a plan, and weigh the liabilities. Traders who make strategic investments, however, may be able to profit from this similar movement. This stock is solely intended for educational purposes and does not contain any financial advice. We frequently get asked why invest in cryptocurrencies if they are volatile. Because of their potential for large profits, cryptocurrencies can still be appealing to many investors, despite their volatility. Furthermore, because cryptocurrencies are uncorrelated with conventional assets like equities and bonds, investment in them might offer diversification advantages. Because cryptocurrencies can be swiftly and simply exchanged for cash, they have the potential to have a high liquidity. Lastly, the technology underlying cryptocurrencies like blockchain technology attracts a lot of investors, and it has the potential to completely transform a variety of industries. After discussing the liabilities and fluctuations, let's move on to the roadmap. The roadmap for crypto passive income. Number 1, learn everything there is to know about the cryptocurrency market, the various investing options, and the optimal approaches for each. The first stage entails looking up paperwork and other important or pertinent details about the blockchain, the token, or the company we want to invest in. Number 2, learn about the liabilities of investing in cryptocurrency, and devise a suitable risk reduction plan. We strongly advise everyone to consider risk management carefully. This entails bringing partners or anybody else who might be significantly influenced by an investment choice up in the discussion. We can gain a better grasp of risk management variables by consulting the following references. Number 1, Facet's article on managing cryptocurrency risk. You can find the link on the article. The next one is Coin Bureau's page on cryptocurrency storage. I added the link in there for references. The next one is CAP's How to Guide. I also added the link. And the last one is the 5 steps to lower risk provided by MoneyBack. You can find all of the links on the newsletter. Number 3, learn about the tax ramifications of our investments and adjust our tax plan appropriately. Keeping up with the regulatory changes is crucial since navigating the tax laws pertaining to cryptocurrencies can be challenging. Capital gains taxes often apply to any earnings we generate while investing in digital assets. The amount owed is determined by the duration of the asset's ownership and our individual tax bracket. Trades between cryptocurrency are likewise subject to taxes. Therefore, it is critical to learn about the regulations in our nation and, if needed, get professional advice. As always, 3 are investments like big investments. 3 are small businesses or tiny businesses like big businesses. And vice versa. Once we have a big business in our hand and we're controlling it, it's bringing millions of dollars per year, we need to treat it like a small business because we need to go back to the basics so that we can continue to reinforce the infrastructure and we don't miss anything so that it can continue to grow on autopilot. A good business will expand because of word of mouth, because we're fulfilling the mission and it has the 8 integrities of the cash flow triangle. Number 4, find out which of the various investment options best suit our objectives by doing some research. This is a crucial stage in using the cryptocurrency market to generate passive income for some. This could entail making use of A. Crypto-based bot methods can help eliminate uncertainty when deciding whether to purchase and sell, but it's crucial to set reasonable expectations for how much money can be made with them. Although they are modest, the returns might be steady dependent on the market. Right now, our favorite bots are the BreedByte bots. Trades in USDT and Ethereum. I added the link for references. Trades in USDT and BTC. I put the link right there as well. The BreedByte explanation. I added the link for that. Stacking cryptocurrency for passive income is an additional choice. Stackable stable coins included Tether, USDT, BUSD, DAI, PAX, and USDC. Ethereum, ETH, Polygon, Matic, MATIC, Tesos, XTZ, Cardano, ADA, Cosmos, ATOM, Polkadot, DOT, and Tron, TRX are some of the well-liked cryptocurrencies to stake. Staking pools, Coinbase, Curve, Compound, Aave, and other platforms are among the places these coins can be stacked. Every platform has different requirements and benefits. Every one of these cryptocurrencies offers varying degrees of stake and rewards and has special characteristics of its own. Before making any investment, it is critical to weigh our options and conduct due diligence on the varieties of options we have in regards to the cryptocurrencies. Earn USDC by supplying Compound at, I put the link. The USDC, DAI, and USDT LP supply curve can be found at Find the link on our website. On the article, get paid to supply BUSD, DAI, and USDC using AAVE. Find the link on the newsletter. Number 5, to optimize our profits, make use of the risk instruments and resources. Some helpful tools that we discover are, for research purposes, use DeFi Llama at DeFiLlama.com or DeFi Llama, DeFiLlama.com. Twitter is the best way to stay up to date with crypto sentiment and protocols, regardless of one's feelings regarding the platform. The homepage of Twitter or X, the Fear and Greed Index, is available at alternative.me/crypto/index/fear-n-greed. Stake and rewards. Find the link on the newsletter. Number 6, regularly review our investments and make any necessary modifications. We use TradingView and Crypto Panic to keep an eye on our investments. Find the links inside the newsletter. Number 7, to lower risk, diversify our investments. Investing in cryptocurrencies can be made less risky by diversifying. Forming a personal pie chart gives us a broad concept of how to diversify assets, which is important. For instance, we might decide to maintain our stablecoin and Bitcoin in a self-custody wallet and increase their percentage. Use charts that provide us a general framework that can be used as a reminder when budgeting and allocating tokens. Number 8, to keep one step ahead of the competition, invest in trends and technologies. Number 9, regularly assess our progress and modify our objectives as necessary. Number 10, make use of professional knowledge to remain up to date on the most recent advancements in the cryptocurrency industry. Using the knowledge of experts involves more than just following the influencers. It is also involves monitoring developer activity and remaining current with news and changes generated by teams and protocols. Last words, we discussed Bitcoin investing a lot in our article today about cryptocurrencies, but it is crucial to keep in mind that a diversified portfolio needs more than simply cryptocurrencies. Developing several passive or residual income streams can lead to long-term financial success and improve living standards. To acquire new skills and expertise, for instance, a lot of investors invest in dividend stocks, real estate, precious metals, cryptocurrencies, and high resale value assets. It can be a fantastic method to improve our standard of living without having to depend on any employment or earn income. Since it is our responsibility to build our own adult roadmaps when it comes to money in life, we are not provided with one. We must choose our own routes, push ourselves to achieve our goals, and do so while acknowledging that mistakes may be made. We have to create the life we want for ourselves. No one else will provide it to us. No one person can follow a single route that fits or works for them. Everyone should chart our own course according to our financial situation and degree of risk tolerance. Discover new things, increase our knowledge, and realize how valuable we really are. Age, profession, and level of education are irrelevant. What matters most are the abilities and the wealthy mindset we decide to develop. No matter what challenges we face, it is our nature to persevere and find methods to adjust. Additionally, we'll be more equipped to handle any situation if we have more knowledge and control over money. Make money our slave. We tell money what to do, and we put it to work in sound investing. Our greatest tools and assets we all have are our mind, time, and freedom. We don't put a price on those assets. We don't sell them. We nurture them. We protect them at all costs, right? And we build with integrity and ethics. And we are our greatest asset. Always invest by following the cash flow tetrahedron as shown on the diagram. Remember, we want to have businesses that produce passive income. Eventually those businesses, right, is paying for all of our living expenses, everything that all of our liabilities, expenses, everything that's on our expenses column. And then also the excess of cash flow that we have left after all expenses are paid, that's also putting money down for real estate, commercial real estate properties to create more passive income. As well, the expenses that we have, right? That includes paper assets and other assets in real estate. So investing is one of our expenses in financial education. I hope that you enjoyed today's talk about crypto. Make sure that you check out the links in the description if you want to sign up for crypto.com and start investing. Check it out, sign up, it's free. Just take a look at the platform, choose the one that you like to invest in, do your research, due diligence, and make sure that you constantly invest in one's financial education. It's something that no one can take away from us. Make sure you get all of our ebooks, How to Build Cash Flow with the Internet, Turn Passive Income On, the 10 New Rules of Money, How to Invest in Crypto to Build Wealth, Understanding Bitcoin and Blockchain, the Rise of Legitimate Reserve Digital Currencies and Assets. We are releasing our 4th ebook in the next month or so. Stay tuned. It's going to be called How to Raise Capital to Build Wealth. The job number 1 of a wealthy entrepreneur is to raise capital. And the number 1 skill is to sell without selling using systems and smart marketing, like I mentioned earlier. And the job number 1 of an inside investor, or also known as a capitalist, that's the highest level of an investor, or a master investor. Our job number 1 is to make money work hard through sound investing. We need financial education, of course, to be able to do that. So we treat debt like money because it is money. Debt is tax-free. We want to use our credit cards not only to buy liabilities and things that we want to have in our life, but we also want to invest that money, that debt, that credit card into acquiring an asset that will produce passive income and will bring the money back to pay the credit card. So the interest rate, everything will be paid by the asset's revenue. And at the end of the day, we create a money from thin air. If we're using 100% of the bank's money or the credit card to create money, we're literally creating money for nothing. And as long as we are able to pay the interest and keep whatever is left as positive cash flow, that is infinite return on investment. Literally, that is money for nothing. That's how we can create money from thin air, like the wealthy do, and we can compound that strategy. We can achieve infinite return on investment with all of our assets when we choose them wisely and we're properly investing in assets that we control 100%. Anyway, remember, control, leverage, plus debt. I'll talk to you on the next talk. Thank you for joining me today. Bring you the good and bad news of money, the business principles that work in all economies. Stay extraordinary and wealthy. Bye for now.